erratically during what we call the flash crash on May 6th. Like that, one of my favorite stocks, Procter & Gamble, dropped from $60 to $38 in minutes, eroding everyone's spirit and certainly everyone's belief in the market. That was when I was on with Aaron. This was the event that convinced ordinary investors that the market indeed is broken, that prices can be illegitimate and maybe not be trusted, and that the gossamer-thin thread connecting the market with reality may have finally snapped, something I've been warning you about. While the SEC is consulting with people, I think the wrong people, about how to stop the next flash crash, like those who profit from the high-frequency trading that I think caused and continues to cause so much carnage, we're stuck dealing with a market that's still very much broken, that is very untrusted, and that I really think has, since May, lost a lot of adherents. We think we haven't put the flash crash issues to rest. As Senator Ted Kaufman from Delaware pointed out today in a terrific speech that I want you to read, we had a mini flash crash just the other day in Diebold. Well, no one even focused on it, but here's the stock. A big company, United Technologies, once made a bid for it. It makes safe security equipment. It dropped from $28 to $18 in 3 minutes. Nothing's fixed. Meanwhile, June 11th, key regulator from the SEC, a woman by the name of Elizabeth King, left to go to work for a company called GetGo, which is, guess what, one of the leading firms that does exactly this kind of flash trading that I think needs to be regulated. Hey, maybe there was a fox guard in the old hen house. On Mad Money, we believe that stocks have to be taken out of the hands of those who trade them and scalp them for no real reason other than for quick profit. Lately, close to 80% of the volume comes under that category. That's right, 80% of what you see on your screen is from this. I think we need to restore the stock market to its rightful owners, you. And we have a man in the United States who actually believes in us. Someone in the Senate who has been a beacon for us, pointed us even to our own error ways with HFT, which is high-frequency trading. He knows how to fix things. He knows how to level the playing field. He's concerned about the next flash crash. He brought this Diebold situation to my attention. I didn't even know about it. He's concerned about regulators going across the street to firms that are complicit in this nonsense. Senator Kaufman's been right over and over and over again on these issues, and that's why we are thrilled to have him back on the show. Senator Kaufman, welcome back to Mad Money.
Hey, Jim, thanks for having me.
All right, let's cut right to it. In this terrific speech, you talk about the idea that there are not only just flash crashes, but there are very brief bungee jumps happening.
Exactly.
Tell our people what bungee jumps are.
Well, bungee jumps are where a stock drops so incredibly, like Diebold, and I think you've got a chart there that shows that it dropped 35% in 6 seconds. Well, you just can't have this thing, you can't have this go on where, you know, because of you have computers, trading with computers, the potential is that stocks could drop, you know, large amounts. And the SEC's answer is to put in circuit breakers, which you could still drop 10% without anything happening. What we need to do, Jim, is what I talked to you about last September. It's coming on to almost a year now. That the fact is we got to take a basic look at market structure. We got to find out what's going on in these black boxes with high-frequency trading. We don't keep track of what's going on. We got to get it back so the American people and people from around the world have credibility and they believe in our markets, because the markets, our markets, as you and I have talked about, the two things that make America great are democracy and our markets. And, you know, if we don't have credible markets, we're in deep trouble, because people go to other countries to do their trading, and then where will we be left?
Well, one of the things I loved in your speech, and I'll tell you, I'm going to put the web address on, because it just is filled with all the things that you need to teach everyone in America, because they're feeling it. Participants no longer believe market structure strongly supports an orderly market. Increasingly, market participants believe that the U.S. equity market structure is not a level playing field. Are there people on the SEC who want to restore the level playing field? And if there aren't, how do we change the makeup of the SEC so people agree with you?
Right. Well, first off, Mary Shapiro's getting it now. She came out in a speech and talked about the fact that capital formation, integrity of the markets are really the key things. She's talking about the fact we probably have to do something about speed, and we got to start looking at dark pools. But it's coming, and I think, you know, they've done a good job of presenting it. They've talked about market structure for months. But what we got to do, Jim, is we got to push the ball over the goal line. We got to get this thing done. We can't afford to have these little, you know, like seizures almost, like little, you know, strokes that are little, because what they could indicate is the fact of a much bigger problem, some kind like the shocks before a major earthquake. I mean, we had this thing on May 6th. It was a good wake-up call for us. But right now, as you know, Jim, we have no real idea. We don't keep the data. We don't have real idea what's going on inside these boxes. And as you said, they've gone in 4 years from 30% of the trading to 80% of the trading.
Senator, do you think, and I have to go back to this Diebold example, that it's not even a news item anymore when stocks drop ridiculously. Right. I mean, have we gotten to the point where the SEC just accepts the fact that because of the price. That's the price we have to have about speed and allegedly deep markets. Is that what they're thinking? That's just the price we all have to pay?
No, I don't think so. I think everybody now realizes this is a problem because, as you know, as Jim, when I talked about it last September, talked about in this speech, when you don't know what's happening in a market, when there's a black box out there, you have no idea what's going on in the market. There's a lot of money and a lot of change and no regulation. That's how we got into the derivatives problem.
Right.
So we really, you know, but the problem is it's a very complex problem. You know what happened? If, in fact, we had no regulation, we had no regulation for years. If when this high-frequency trading just started, it was like a tree, and we trimmed it every day, we'd have a nice little tree that we could regulate. What happened? This thing went on for 4 years. It's now this gigantic redwood, and trying to regulate it, trying to get it back in a box. And when this, but the thing is, Jim, if this redwood falls over, it's going to crush everything. And one of the things I'm most worried about is it's going to crush the credibility of U.S. markets. And that really causes us problems because our markets have always been the engine that drove the innovation and the development and the ideas in this country. And we got to keep that well. So it isn't just the fact that we could have another, you know, God forbid, a major meltdown. The problem here is where do we go now in terms of as people want to come out and have IPOs in initial public offerings, where do they go to get the IPOs in a market that's totally fixated on trading thousands of shares through computers and through algorithms in order to energize money, and they don't really care about this kind of business.
Senator, one of the people I was counting on was a woman by the name of Elizabeth King, who was a regulator really in the thick of things. And she leaves and she goes to a place called GetGo, which is a high-frequency trading operation. I mean, don't the high-frequency guys therefore have tremendous access to our government?
Yeah, well, but the problem is this is called industry regulatory capture. It happens in all the industries. It's what happened in BP in the Gulf. Basically, if you talk to the regulators, and they had the people, and they interviewed them, they were talking about how we're all part of the oil family. They didn't go out to, you know, they're part of the oil family. Well, you know, back there was when Chris Cox and those guys, we're all part of the investment family. Well, you know, you're supposed to be the cop on the beat. You're not supposed to be down at the bar, you know, taking cocaine with the rest of the guys. You're supposed to be the one that's saying there's something wrong here. So we got to get that back on shape. And I think this thing with King is an example. We cannot have in the SEC. Same thing went over, Jim, when we had this roundtable. Finally had the roundtable on high-frequency trading. The initial group of people that are going to have come were all high-frequency traders. Just like, as you remember, when we went through the thing with the short selling, when they had their roundtable, and that it was all the short sellers were on the roundtable. You got to get it out. You got to get real people in there. You got to get people that really care about it.
You're right. I know.
Saying the right thing.
I got fooled by these people. One last question. Didn't we have some activity in the Washington Post stock today that looks like another D-Bull?
Yeah, I know. See, this is going to go on, and I'm saying it's the death of 1,000 cuts. Washington Post B stock was up double the price of the stock, and so no, this is the death of 1,000 cuts. If we don't get this under control, we not only could lose, have a major drop in the market, we could lose our credibility, we could lose the engine that drives our entire economy.
May I tell you, sir, that you are the only one that I hear speaking on this, not in the private industry. We had that Mason Hawk in Southeast Asia, really terrific, but I don't hear anybody else care. But, you know, we lose these stock markets. We lose our way to be able to invest 401k, 529, IRA. We lose that.
Exactly. No, you can kill. I've said it before. If people on Wall Street don't get involved in this and start coming forward, you can kill the goose that laid the golden egg. You could actually kill it deader than a doornail.
Absolutely. Senator Ted Kaufman of Delaware, you are a delight to have on the show, and I'm now going to post the address for your speech. Thank you so much, sir.
Thank you, Jim. Always a pleasure.
Okay, to read the senator's full speech, which you must, you can head to kaufman.senate.gov. You will be as angry as I am, and maybe you'll let the SEC know, as I do almost every night. We must return our markets back to the rightful owners. You. After the break, I'll try to make you more money.
Don't move that dial.